Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. I'd like to offer you some foreign exchange charts today. And the first one I'd like to look at is the euro against the dollar. If we look at this, we can see a countering bearish black Mariposa yesterday after two strong bullish days. It was again the same cap as the day before, and as of last week, it's the old neckline of the July 2017, November 2018 head and shoulders top, currently at 113.36. Today we explored the downside further, but backed off up a bit again. This is partly due to the same supportive reason as over the weekend, the rising May to day uptrend, currently at 111.89. The whole question of whether we are constructing a double top type topping action or a bullish halfway hesitation is still open, though I keep hoping for a conclusion sometime soon. In the meantime, we still have a series of potential targets on the upside for the previously off-mentioned diamond bottom. First potential is at target X at around 116.75, with a further fuller potential would be around target X1 in the 117.25 area. Finally, a newer potential target X3 on the upside in the 116.65 area. This would only work if we see the whole of the last few weeks' action as a possible bullish halfway hesitation. Watch out for that double top action just in case. In the meantime, also I'd like to look at cable, sterling against the US dollar. An interesting move yesterday, a countering key reversal down to the earlier recent big key reversal up. The market closed back down below the broken lower time, currently 125.36 of the off-mentioned March to May bullish shift pitchfall. That's also the medium moving average at 124.84, and now also the short stroke medium moving average at 124.25. Today we're playing either side of that short stroke medium moving average so far. To have two key reversals within 1 week is rare. To have two so far, remember it is only Thursday, to have two so far in the opposite direction to each other, well, that is just nutty or a sign of some serious indecision. The third chart I like to look at is the euro against sterling. A bullish white soldier yesterday after the previous session's indecisive doji cross. The top side was capped yet again by the big March to April 50-cent Fibonacci line at 90.85. Meanwhile, below, the lesser 38.2% Fibonacci line of the whole of 2020 move so far at 90.34 held up the bulk of the market. Today we're testing down to the lesser Fibonacci level once again, probably because we had such a headache from banging on the upside. The fourth chart I'd like to look at is the US dollar against the Indian rupee. A bullish opening white Mariposa yesterday. Possibly you could call it a wannabe bullish thrusting pattern, though it doesn't fit all the criteria for that. The top side was limited on a closing basis by the recent 50-cent Fibonacci line at 75.67, though the market seems to wish to try up there again. This neither helps nor fouls any idea I've been prattling on about for 6 weeks now, how the overall action from March to date is an inverted ascending scallop pattern. It is not over yet, so there's some numbers on this pattern, and also the recent descending triangle. The potential target X on the upside for the ascending scallop pattern is in the 80.35 area, right off the top of my current daily chart. The potential target X1 on the upside for the recent descending triangle pattern would be in the 77.80 area. I'm starting to think about retiring that idea. There's also a potential for a possible bearish double top action if it holds at the 77 even area and reverts back down. More on that as we get closer. In the first two cases, the April low at 74.90 must be maintained. This is what to watch for now. The final chart I'd like to look at is the US dollar against the Brazilian real. A huge bullish engulfing pattern and an open and closed long white Mariposa yesterday. It was so big that it engulfed and then some the whole of this week's main body actions. This counters but does not remove the idea of looking at the mid-May to day action as a potential bearish halfway hesitation. Preliminary target X2 is labeled for such a move in the 425 area. In case you've forgotten, target X at about 470.5 and target X1 at about 442.15 are the targets for the recently stalled bearish bump and run reversal pattern. The top side yesterday was again tempered by the combination of the previously mentioned very recent 50-cent Fibonacci line of 539.29 and the short stroke medium moving average currently at 539.44. That about wraps it up. So in the meantime, good trading and stay safe in the markets and in real life.